What is third-party insurance bad faith? Have you ever wondered what happens when an insurance company does not play fair? Let's talk about third-party insurance bad faith, especially in the context of auto insurance liability coverage. This situation arises when an insurance company fails to act reasonably or fairly while handling a claim made by someone other than the policyholder. Typically, this involves a person who has been injured or has suffered damages due to the actions of the policyholder. In these cases, the insurer has a responsibility to defend, settle, or indemnify the policyholder against claims brought by third parties. So, what does bad faith look like in practice? One common issue is when an insurer unreasonably refuses to defend the policyholder in a lawsuit that is covered by the insurance policy. This can leave the policyholder vulnerable and exposed to significant financial risk. Another example is when an insurance company fails to properly investigate or evaluate a third-party claim in a timely manner. This can lead to delays in resolution and unnecessary stress for everyone involved. Additionally, if an insurer refuses to settle a claim within the policy limits, despite reasonable offers, the policyholder may face greater financial exposure. Delays in payment or outright denial of a valid third-party claim without a legitimate reason also fall under this category. Sometimes, insurers may offer settlements that are much lower than the actual value of the claim, pressuring the claimant to accept less than they deserve. Misrepresenting policy terms to avoid paying claims is another tactic that can be seen as bad faith. When an insurer acts in these ways, it breaches its duty of good faith and fair dealing owed to the policyholder. This breach can leave the policyholder at risk of excess liability beyond their insurance coverage. If the insurer fails to settle or defend properly, the policyholder may pursue a bad faith claim against their insurer for the damages caused by this misconduct. In summary, third-party insurance bad faith involves the insurer's unreasonable or unfair conduct in handling claims made by others against the insured. The insurer must act in the policyholder's best interest by properly defending claims, thoroughly investigating, and settling reasonable claims within policy limits to avoid bad faith liability. Understanding these aspects can help policyholders protect themselves and ensure they receive the coverage they are entitled to.